Okay, folks, welcome to Sunday Night Stock Charts Live. This is Bob Desmond, and we are going to talk about a bunch of stocks today that I like going into the new trading week. We're going to talk about what happened on Friday, and there's a lot of conversation out there about market breadth being very, very poor. We've known this for quite some time. Was Friday the start of a stock market correction or sector rotation? We're gonna try to answer that question. We're not really gonna know tonight, but we can entertain it. We want to keep an open mind. There are reasons out there for us to be somewhat optimistically bullish on the stock market. There are many other reasons why we should not be bullish on the equity markets, but we're going to go over the whys behind why we may be seeing some sector rotation and some underlying strength in the equity market. We did cover some shorts on Friday, right at the lows of the session, because we were so oversold intraday that I had to make some of it real. And I did not expect for us to reverse as much off of the lows as we did. The Qs did not close positive on the day. That's a negative. So while we saw a nice reversal off of the day, all reversals are not made equal. All up days are not made equal. All down days are not made equal. We need to put things into context. The stocks that I like going into the new trading week, for those that are joining in from Stock Twitch or Twitter, GPK, OHI, CWST, SCI, VOYA, MMS, HQY, and all of these. And I also like Tesla. Forgot about Tesla. We like Tesla. So we're going to talk about the whys behind that in a moment. We're going to talk about the charts and why we like them. And members, we will definitely be involved with at least one or two of these in the coming days. So let's get to it. Let's say hello to folks. Hopefully my mic is working. I did not check comments first. Bad thing to do. TZ Burton. Welcome, sir. Okay. Light crowd tonight. All right, let's get to it. We have the futures that are open. Gold is kicking off the week with an uptick. Why? You're seeing yields come in a little bit, about 1/3%, not a little bit, a lot of it. Dollar was lower coming off of its lows. This is a 30-minute chart. This is a 30-minute chart. Volatility up fractionally. Gold now giving up a little bit of those gains, but still up fractionally on the session. We're going to check back in with gold. Let's do as we normally do. Let's begin with the S&P 500, and then we segue through the equity arena. Then we go to currencies, then commodities. And then I scare the hell out of people when I talk about what's wrong with the market, why it's going to crash. But let's go to E-minis. I know the symbol. I don't know why I'm searching around for it. The ES. ES. This was expected. We're going to be giving back some real estate that we took on Friday afternoon. We closed out the day with very, very high levels of RSI, 15-minute chart, 30-minute chart on the E-minis, to a lesser extent on the Qs. But expect more weakness here. The daily candlestick was very bullish on the E-minis on Friday. So I suspect that we're going to get some follow through. But I do believe that we are going to see a broadening of the participation in the market. Case in point, here's the heat map from Friday. And remember, you've only had 7 to 10 stocks driving the markets up higher, right? So they're all here. NVIDIA, Microsoft, not so much Google and Apple. CRM, I see bounce back. These are some laggards. Amazon did finally make a new all-time high. Tesla laggard. I think that's going to play catch up. But you could see how they were weak on Friday. What was strong? Banks. All the banks were strong. Consumer staples, energy, consumer discretionary. Pharma was a mixed bag. So that was the market on Friday. And remember, the Qs closed down with the S&P 500 closing up. Now, oh, thank you, yes. Talent. Thank you, yes. I appreciate that. This is the second time I did this in like the past 2 live streams. Need to share my screen. That would help. So this is what I was talking about. NVIDIA down on the session. Semis by and large down on the session. Microsoft was about flat. Apple, men's not a great day. Amazon down, Tesla down. Costco, no big deal there. That was just a pullback on earnings. Google flat, Meta flat. What was doing well? The banks, energy, financials in general, not just the banks. Financials in general did very, very well. You have REITs did really, really good last week. And in fact, I texted my father. I don't know if you ever texted me back. There's one REIT that's out there that is sporting a big fat divvy, and it looks as though, no, he never replied back to me. It looks as the symbol is HR, the symbol, yielding 7.64%. We're going to go over this chart in a moment. It looks like it's bottomed out. I believe it is in the medical REIT arena, so it's not really exposed to office space per se. Sorry, folks. Dehydrated. Okay, let's get back to it. Equities. So S&P's down fractionally. NQ, the NASDAQ 100, down about a 0.25 percentage point. And you can see they had to give some of that run back. So I suspect we're probably going to see a little bit more of a pullback. Remember, this is light volume on the futures. You're going to get some profit taking on Monday morning on the equity markets. I'm pretty positive that we are going to open down tomorrow. I don't think it's going to be a horrible sell-off. Maybe it is. For the Qs, I think that if there's one sector or one component of the equity market that's under a lot of pressure, I think it's the triple Qs. They have come a long, long way, in particular, NVIDIA. I'm not bearish on NVIDIA, but I can go over a chart if I remember of where we're at in terms of my price target on NVIDIA. We hit that price target last week. A little bit of coffee. Let's talk about the Russell 2000. So the Russell 2000 was able to open up higher. Now, it did leave out the day on Friday overbought. I do not think that we are going to hold gains if we keep these gains into Monday morning. I think we're going to pull back. Maybe we're going to close the day up higher, but I just think we're going to have a pullback to alleviate that overbought intraday condition. Then perhaps we move up higher. Now, let's take a look at the mid caps, because that's where I'm seeing a lot of opportunity. Mid caps, small caps, individual names, though. I had all this up here. Note to Thinkorswim, leave more room on your recent charts than what you allow for. I rarely look at the mid caps. I forget the symbol. God damn it. All right. I'm just going to show you MDY. This is a mid cap ETF. And you can see the rip that this had on Friday afternoon. Now, this is not trading right now. It's not a future. It is a ETF. So I wish I had that symbol for the small mid caps. All right, be that as it may, it's not a big deal. And I had it up here. I prepped. Here it is. EMD, the symbol. Okay, so here are the mid caps up as well, along with the small caps. Now, keep in mind, NQ down by a third, about there. S&P 500 or E minis down. Small caps, mid caps up. Even though they're overbought intraday, they are up. So I get the vibe from looking at the behavior of the market on Friday. That was a ruthless sell-off, and we bounced back. So what that tells you is that there's an underlying bid in the market for a number of stocks, but not so much for the ones that have been strong of late. So certainly the mid caps have not been a leader. Small caps have not been a leader. The broader S&P 500, the equal weighted basket, has not been a leader. Perhaps it's time that we get some sector rotation into those names, because overall the markets are overvalued as a whole, but you may have opportunities in individual stocks that are undervalued. Now, taking a look at the US dollar, we are opening down. Now, the surprise last week remember, Thursday Night Futures Live, Thursday Night Stock Charts Live, we went live. We were talking about the weekly charts of the US dollar and how one trading day can make a difference. We were looking at the euro. Euro was weak. Yen was weak. Then all of a sudden, on Friday, everything turned around. So the dollar, let's go to the weekly chart. The dollar did close up. Let's get rid of all this. Okay. The dollar did close up on the week, but it failed to break out. On Thursday night, we were above this resistance level. And this is why I always say one trading day left to go. Don't buy on the hope that we close above a breakout point. Wait until you validate that we are going to close above that breakout point, 3:55 Eastern Standard Time. Then make your decision as to whether or not you want to buy or sell the stock that you're hoping for is a breakout. So dollar did not truly break out. We backed off. As a matter of fact, this is not a fair. You know, it's fine. It's close enough. Now, let's go to the euro. The euro is holding the lower band of a rising wedge formation. Here, upper band in green, lower band in red. We were down on Thursday night. By the end of business on Friday, we were up. We're bouncing off of support. I think that this ascending wedge formation may get resolved to the upside. Another way of looking at this is this way. Let's clear all this up. And the reason why we're talking so much about the euro makes up 55% of the Dixie basket. The Dixie is the US dollar basket versus other currencies. The euro is by far the largest component relative to or versus the US dollar. See the wedge formation we're forming here? I think this gets resolved up. Now, looking at the yen, as a matter of fact, let's go back to the euro for a second. We're up on the session. And you may be saying, why is he taking so much time to review the currencies? The reason is that yen is down. The reason is that what do we like to trade? We like to trade commodities, a lot of commodities, oil, gold, I don't care. But ideally, the US dollar is going in the opposite direction, especially in the case of gold and silver. Those names did not have a good week last week. Gold and silver had very, very poor weeks. And on the month, gold put in a big 2 sequential topping tails on the monthly candlesticks. So it may come under pressure unless, of course, the dollar weakens. You want to see the dollar weaker. Unfortunately, that weaker dollar is going to create more inflation. Let's take a look at Bitcoin. Bitcoin, I think, is getting ready to blow up. I mean, up, not down. Looking really, really good here. I dollar cost into Bitcoin every Monday morning. Okay, so that's Bitcoin. Let's segue into energy. Energy had a beautiful week last week. Bravo to energy. I mean, wow. We put on, before the rally began, we put on a trade in Gush. That's a leverage product, GUSH. I posted that trade in our Slack forum, and we are, I think, up on that now. We were down, then that reversal day on Friday, just woo, really nice comeback. So the only thing that concerned me is that the price of oil is highly, I mean, highly correlated to the energy stocks. And last week you saw a divergence. Oil was down. Energy stocks went up. So we're looking at now at a chart, the weekly view of light sweet crude, Texas light sweet crude. And we are up on the week. As you can see, it was a very bearish week last week. Let's go to the 15-minute view. Trying to make a comeback here. Let's throw up an alert here. See if we get, this would be a big move. Oil. I'll get it right eventually. There we go. Let's say hello to folks. The lovely Jody. There she is. Welcome. Danny. Welcome, brother. Mr. Pete, I skipped over you. And of course, Talon, the Med. Talon, I barbecued. I choked the house today. I soaked, what do you call it? Wood chips in water. And then I put some pork ribs on the grill, the Weber. I smoked out the house. It was way too close. People were choking. But they turned out really good. I did a dry rub. It was really, really good. So I don't. Nobody appreciated it. Nobody appreciated my efforts. Anyway, let's move on. What I'm picking up here on this daily chart of light sweet crude, take note of this. This looks like a W formation in the making. Here's the left side of your W. Here's your pivot point. Okay. Let's go to natty gas. Natural gas has been under a lot of pressure. Whoa, big move here. Nat gas up 3% at the open. Sunday nights, for whatever reason, there's always a big move in natural gas, either up or down. The question is, on Monday, does it hold it? Many times it doesn't, but it's been strong of late, so this may just have traction. Now, let's see what it did on the week last week. It actually closed up last week, but it came under a lot of pressure late in the week. So this is actually a pretty good looking chart. We opened up into this wick. Many times when you get a candlestick with in this case, a bearish wick, granted we closed up on the week, but we see this wick shadow, call it cupcakes, it doesn't matter. It's a sign of resistance above. Now, when you gap up the next period into that wick, that's very, very bullish. And the same is true is if you have a bottoming tail, meaning a bottom underneath the candlestick, and you gap down into that wick. Many times you make new lower lows. In this case, I think we are prepared to make new higher highs. So this looks actually looking pretty good. I'm sure it's overbought already. Yeah, it is. So I wouldn't be a buyer here, but we watching for a pullback on nat gas. Commodities look pretty good right now. Pretty good. So a good session so far. Let's go back to gold. Let's see if it's holding those gains. It is not. It's now down. Again, gold had a very bearish week last week. So we have taken out the lows of the session. Let's see if we take out new daily and weekly lows. Silver. Again, silver was really pounded last week. That's up about a 0.5 percentage point. But I'll bet you we're off the highs. Yeah, we are. Here's a view of last week's price action on silver. That's a bearish reversal bar. So I'm not ready to make the call here that we're done going down. This could just be the beginning of a correction. But again, it all goes back to the US dollar. What's the US dollar doing? Yeah, we broke weekly support last week. So I think we're probably going to pull back here. I don't think this is going to hold. But I think it's going to be an opportunity. I'm not a silver bear. I just think that we've come a long way. And we're going to give some back. Let's check in with agriculture. Soybeans, they are up fractionally. Soybeans, June is a very good seasonal month. The 3 periods preceding June, the 3 months preceding June, very, very bearish months for soybeans. June is one of the better months out of the year. For those of you that are into ag. And this is a breakout, 15-minute breakout. On the week, though, no bueno last week. This is not reflective of this week's price action yet. Wheat up just shy of a 0.25 percentage point. Where's our corn? Corn taking a hit, down about 0.11%. So a mixed bag in commodity land, mixed with precious metals. Let's check out copper. It's more of an industrial metal. That's up a 0.5 percentage point. Copper's been under a lot of pressure of late. Are we near a trough here? This is a failed breakout. We broke out the final 4-hour bar on Friday's close. We're probably going to pull back and do a retest of support here on copper. Let's create an alert. All right, so what we're looking for is after this breakout, you can see it just barely broke out on Friday. We're going to come and do a touchback, a retest of the support level. I want to get notified of when that happens because perhaps we'll be nibbling a little bit on copper. Maybe we'll sell puts. I think they're optionable on Thinkorswim. QC has no options. I guess not. Nope. So we'll have to buy what's active. I don't want to buy the front month futures contract. Do they have the MCL? Yeah, so this is the micro contracts. If we get a healthy breakout on the daily time frame, I'd be looking at a August contract, and one lot contracts will tie up about $1,000 in buying power, similar to an option. So that's probably the path I would take here. And these are optionable. It's saying Thinkorswim optionable, the micros. I don't know how worth it that would be. I'm not seeing options here. Oh, this is the wrong symbol. MCL, wrong chart. Yeah, Talon, we went over that. We went over nat gas. Yeah, amazing price action. Okay. On there we go. On nat gas. No doubt about it. Nice little comeback. All right. How expensive are these options? You could sell premium here on copper. IV rank of 56, very, very favorable to option writers. So rather than buying copper, we may just sell premium here and puts, probably puts on copper. All right, copper's on our watch list for the new trading week. All right, let's begin. I want to talk about. Let's go over what's coming up this week, and I want to get into some analysis of the charts. Now, this is going to be a week of huge economic data. Okay, so can the equity markets continue up higher? Yes. The problem comes in is if you see a rise in jobless claims. And the problem is that both the U3 and the U6 numbers, the U3 is the headline number. That's what gets reported by CNBC and Fox News and all those guys this coming Friday. I call it the pimp Mac Daddy of all economic data. You got to have jobs if you want the equity markets to continue up higher. The consumer is broke. They got to be working. And they are. Those that are working are carrying multiple jobs. So this coming week, we have on Monday, manufacturing PMI. We came back into expansion just barely. Any read above 50 is a sign of expansion. Construction spending, ISM manufacturing, that's still negative in contraction. Factory orders, job openings. Keep an eye on this one. ADP employment. This is the precursor to Friday's data. ISM services coming out. We should get another services. Yeah, we get services PMI, Purchasing Managers Index. That comes out at 9:45. Beware of that 9:45 report coming out. Don't forget, all reports do not come out at 8:30, 9:45, 10 o'clock. You get reports coming out. Thursday, each week we get initial jobless claims. Then, of course, on Friday, the pimp Mac Daddy of them all, I can't highlight this, U.S. unemployment report, also known as non-farm payrolls. They're expecting an increase in jobs of 178,000. Let's war game this a little bit. Let's do a pretend. What does the market want? Over the past few years, we have been beating by a mile. I don't think last month we beat. I think we missed last month. If they come out with over 250,000 jobs, 230,000, maybe even 210,000 jobs, I think equities could sell off. Why? Simple. It's because if you're the Federal Reserve and you're seeing the dollar perhaps weakening up, you're seeing inflation nowhere near that 2% target, how are you going to justify cutting rates when you have job numbers that are beating expectations by a mile? And so what does that mean for the rest of the market? Why has the market been rallying? It's the promise, it's the hope of no more interest rate hikes. And now it's the hope of cuts. But it's like Lucy and Charlie Brown with the football. Every time Charlie Brown comes running up to the ball, because we're promised a rate cut, Lucy pulls the ball away. That's what the Federal Reserve does. They put the carrot out there. They put the ball out there. They say, come on, market. Come on up. Come on up. And what do? Oh, no, not this month. Maybe next month. And that's reflected in the CME Fed Watch tool, which we're going to go to in a couple of minutes. What if they come in as expected? I think stocks rally. Why? It's because the curve has been climbing for jobless claims. So if they see that get stymied a little bit, worry about recession becomes less worse. It's not as a concern. What if it misses by a mile? Then it's a coin flip. You'll probably see the CME Fed Watch tool reflect a probability of an increase of a September rate cut increased dramatically. But then the concern becomes, is the numbers so weak that we're threatening to move into recession? Then equities will sell off. So it's coin flip. So that's my take on non-farm payrolls. I'm usually pretty good with these. So stay tuned. And watch this number here. They do not want to see the U.S. consumer making more money. They do not want to see that. So if this comes in hot, equities could sell off. How expensive are we? We're pretty goddamn expensive. Schiller PE ratio, this is a rear view mirror view, 34.54 on the Schiller as measured by the Buffett ratio, Buffett indicator. We are extremely, strongly, in their words, strongly overvalued. And we are at a 2 standard deviation move yet again. I remember talking about this back here in 21. We went into recession soon thereafter. So, history has shown us we could press up higher here. However, expect some ruthless selling in the subsequent months. Now to the CME Fed Watch tool. Come on. I don't know why it has to reload. Okay, September rate hike. That's what we're focusing in on right now. This was above 50 on Friday afternoon after being in the 40s earlier. We're still above 50. So it's a coin flip as to whether they go in September. Now, I think that come Friday afternoon, by the end of the closing bell, this is going to be either 5 or 10% higher or lower due to non-farm payrolls and all the economic data coming out this week. Earnings, for the most part, are done. Now, this is from the Kobisi letter. The equal-weighted S&P 500 relative to the S&P 500 index has dropped to its lowest level since March of 2009. So equal-weighted means that it's not – the S&P 500 is driven by those that have unusually high enterprise values, market capitalization, NVIDIAs of the world. NVIDIA's up, S&P 500, you get dragged up. But when you do an equal weight, one share of NVIDIA is equivalent to one share of ExxonMobil, well, then it's a completely different view of the stock market, or the S&P 500 in this case. So the equal-weighted S&P 500 relative to the S&P 500 index has dropped to its lowest level since 2009. That was a bottom. So they're playing this as if it's kind of bearish. I don't take it as that. I take it as it's bullish. This year, the S&P 500 has gained 10%, while the equal-weighted index just 3%. At the same time, the Mag 7 names have rallied over 50%. So there's your market capitalization driving the index higher. Since the ratio peaked in February of 2023, the S&P 500 is up 29% compared to a 7% gain in the equal-weighted index. Really like an anchor, that equal weighting. Meanwhile, the top 10% of U.S. stocks now account for 75% of the S&P 500, while most since the 1930s. The market has never been driven by so few names. Very, very true. Very, very true. Now, what if these names just trade sideways? What if they consolidate and money segues into other names, broadening out the equal-weighted basket? And here is J.C. Parent's take on this. They are lying to you. This is not a gauge of market breadth. It is just a sector rotation reading. I agree with that. Again, we started off with this. What did we talk about? We talked about sector rotation on Friday. We had laggards that were leaders, and what were laggards were leaders on Friday. Now, that's just one day. Let's see if this continues, though. Bloomberg and Cheddar are both, I don't know why he's being hyperbolic. I don't know if they're lying or misinterpreting the data. So I think they're being a little bit doom and gloomish, and that they're not taking a look at the broader view. And I think JC is on point with his interpretation of what happened on Friday. Now, when you take a look at the equal weighted basket on a monthly view, this is the equal weighted SPX EW for you folks that are playing at home versus the SPY, the S&P 500. And you can take a look at this monthly chart and you can say, wow, this is a complete and utter disaster. But I want to talk about a bull case here. What about this? Are we forming a double bottom? That's what I'm seeing. I mean, we put in a higher low here. We've been holding it for a couple of quarters now. So to me, we've stopped going down on a relative basis, equal weight versus the S&P 500. So I'm more inclined to look not necessarily at the triple Q names, of which I still have a short position. However, we bought energy. I think the week before last, maybe early. I think it was the week before last. We bought energy. So we're moving into areas that have performed okay, but have underperformed the magnificent 7 to 10, whatever it is today. So I'm thinking this is more bullish than bearish for the equity markets in general. Not so much for the Q names. I'm still bearish. Now, energy, look what it did on Friday. Look at this beautiful, beautiful breakout. Am I a buyer here? No, I'm not a buyer. I already own it. I will buy more when we do a pullback and a retest of what was resistance should now act as support. It didn't on this retest back here. Remember, we broke out on the 17th of May and failed to hold it. So I'm not going to add more to this position until I know I have a successful retest, and I'll add more even when we begin to break out to new higher highs. You want to leg in, scale in. So I'm bullish on certain names. I think that they're just going to do well. I mean, take a look at MDY. This is the mid-cap ETF. Look what it did on Friday. Nice little breakout. It closed up. What did the triple Qs and NVIDIA do? They were down. Granted, they're both very, very overbought. This is a ratio chart. Look at where they are relative to the third standard deviation Bollinger Band. This was unsustainable. They had to pull back. That's why we were shorting. Not NVIDIA. I shorted Qs. Let's go to a weekly view. This is like a shooting star formation almost. Monthly view. RSI. 88.84. NVIDIA standalone. RSI 85.28. Trip Qs. Monthly chart. Not as overbought. 460 is resistance on the triple Qs. I'm looking at other areas of the market. Long story short, semis last week. On the month, they closed well. On the week, reversal bar. They made a new all-time record high, but failed to hold it. Now, is this a broken chart? No, it's nowhere near it. Would I short them now? No, I wouldn't. Not yet. Not yet. All right, let's I want to talk about, let's just blow through a couple of these. Why do I like energy? This is why I like energy. Uh, Data centers, AI, they're building data centers all over the world, and they're going to be consuming a tremendous amount of energy. You got to be in energy because OPEC is cutting production. That's why we like oil. Remember that daily W formation forming on oil we just went over. All right, you're taking way too long. Jesus Christ. Inflation, freight rates. We've been talking about this. The Red Sea is by and large closed. If you're a tanker going through the Red Sea right now, you are under attack. They're shooting anti-ship missiles at these tankers. Freight rates are headed higher. We know about this. This is the Baltic Dry Sea Index. Actually, well, this is not. This is a different index. But the Baltic Dry Sea Index, equivalent to this, all moving up higher. We're going to be paying this bill. They can't get these Houthi rebels under control. Meanwhile, delinquencies, 90 days late. This is when the banks begin to charge off the debt and send it off to a collection agency. And it's moving up dramatically higher. Real disposable income dropping like a rock. All right, let's do a couple of stocks that I like a lot moving into the new trading week. So let's bring them up. Make sure I didn't miss anybody's. Sean, welcome. They are going to play down unemployment in election year. Yeah, they'll manipulate the numbers. The problem is that when they manipulate the numbers, they're not doing it for Wall Street. They're doing it for Main Street. They want the headlines to say job numbers beat expectations. The problem is the equity markets don't want to see that because the probability of interest rate cuts goes down. So they can manipulate these numbers for an election year, but I don't think that they have the intellect, honestly, to manage it appropriately to get the biggest bang for their buck. People want to see their 401k plans moving up in value. Americans, by and large, are investors. So if their 401k plans are declining due to stupid manipulation of the unemployment data, that's a problem. So they may be chopping off their nose to spite their ears, or chopping off their ears to spite their nose, something like that. A TZ Burton. They're going to play down employment? Yeah. Yes, correct. We just covered that. Yep. Ramon. Hi, Bob. Looked at Fossilwag. It reached to your target, I believe. Any thoughts? We'll take a look at it. Sean. Okay. So some charts that I have my eyes on for this coming week. Let's begin with, we're going to go to a weekly chart. And what I did is I used this scan here. If you're wondering how I came up with these names, I spent a lot of time this weekend looking at the mid caps. And we've been talking about the mid caps and how they outperformed on Friday. All of these names are mid cap names. And I did what you call I have it labeled here, contrarian squeeze. Basically, all it is the Bollinger Bands relative to the Keltners. The Bollinger Bands on a daily and weekly time frame are trading within the Keltner channels. So I did the scan on a daily time frame, but a number of these are also firing off or setting up on a weekly time frame. I want to begin with those first. So let's get to it. And if you want this ability to scan for these names, link below, 35% discount code, TrendSpider. A lot of great tools here. Let's get to it. I set up a watch list for these names. We're going to go to a weekly chart. Crude oil now negative. All right, let's go to the weekly chart, sort by setup. Red means that what you have is a squeeze forming. Again, the Keltner channels, the Bollinger Bands are trading within the Keltner channels. So here's a weekly chart of OHI. We broke out the week before last week a retest, which is what I always talk about. Wait for the retest. Don't hope when you should fear. You may get a better price. If you bought this breakout, you could have got a better price the following week. You could have nibbled, then nibbled more back here, averaged into the trade. Now, this is a successful breakout. Take note of the Bollinger Bands in orange versus the Keltner channels in off-white, tan, whatever you want to call it, mauve. So loving this breakout. You take a look at it on a daily time frame. It's moving up higher. So one of my favorites going into the new trading week, OIH. The next one is SCI. SCI. And this one, this broke out as well the week before last. Then the last week, it did a successful retest. Yes, it was down on the week, but I always like to say it's the quality of the down week. It's the quality of the up week. All down weeks, all up weeks are not made equal. This is a bullish chart. And you may be saying, how can that possibly be bullish? We were down. The reason is that we were way down on the week, but we did not take out the prior week's lows, and we rallied off the lows of the week, closing back above the 21 period EMA. And yes, we closed negative on the week, but pretty much unchanged on the week. Now, daily time frame. We're breaking out. We're going up higher. So what I like to do with these is take a look at IV rank. How expensive are the options? If the options are expensive, I'll sell the premium. But in this case here, I would probably buy the options because while they're a little bit expensive, I like to see them cheaper. The quality of the setup is just beautiful. And we have a weekly squeeze. We have a daily squeeze. And it's beginning to fire off. I want to be long of this product. As for OHI, about the same. But I prefer SCI. Now, this one here, HQY, I just took note. They are set to report earnings tomorrow. They're reporting earnings tomorrow. So I like this stock. The caveat is they have earnings. I will not trade this. I won't get a chance to. I don't know what they're reporting before or after the close. After the market close, I will not be buying this tomorrow. No trade whatsoever on earnings. Now, here's why I still like it. Weekly chart. Look at this setup here. Look at the beautiful breakout. W formation on stochastics. Good volume last week. We have our squeeze, Bollinger Bands in orange inside the Keltner channels. Same deal on the daily chart. Now, this has already gotten a little bit of beyond our pivot point buy, which would have been here. But we'll watch Tuesday after earnings. Maybe we'll get a pullback. If it's just a profit taking on earnings, then if earnings are good, then we'll enter the trade, but not beforehand. VOYA. This is another squeeze firing off on a weekly time frame. Bullish key reversal bar. They tried to take it down. They reversed it to close up. Daily view. Strong breakout. We didn't have a retest here. I'd like to see a retest, and I'd be a buyer. No earnings coming up. Maximus. I have no idea what this company does. Zero idea. I'll outsource my concerns about fundamentals to Investors Business Daily, I want to make sure that we have an accumulation distribution rating on the stock of no less than a B. You want to make sure the shares are under accumulation by institutional investors. And while we closed down last week, folks, all down weeks are not made equal. This, to me, is looking pretty darn good. Bull flag setup. Daily view. Again, Bollinger Bands inside the Keltner channels. I'm nothing but bullish on this stock. GPK. Where are we at weekly time frame? Beautiful bullish key reversal bar off of the 21 period EMA. Volume a little bit light. Daily view. Beautiful breakout. Very, very nice. Great volume on Friday. Now think about it. Qs were down. The video was down. What was up? Every single one of these names was up on Friday. Now this one here is really begun to run. I don't like to chase, but it still looks good. If it was my only choice, I would focus in on it. I think it's going up higher, but a lot of the rally is already run. So I don't want to chase nickels here in front of a steamroller. So I'm not going to chase it. I would, however, do this. What is our... Nah, I can't sell premium here. It's only 15%. So I'm not a buyer here. There's far too many other opportunities to invest in. All right, let's do some chart requests. And let's call it a night. I got to go to the members area. Let's bring up Fossil. And folks, again, all of those came from this scan here, TrendSpider, 35% discount code below. And it's a lot more than just scanners. Okay, Fossil. Let's bring up my other chart here. All right. So let's begin with the weekly chart. All right, so you had a very, very tight wedge formation, which we broke out of. You have another wedge formation that is forming here, and we broke out. I'm a buyer at $1.10, but I would keep a really tight stop loss order here. You can see that revenues are declining. I don't like that. If memory serves, we looked at the Investors Business Daily. Their EPS growth was rising. If memory serves, it could be inaccurate. Fact check me on that. But revenues, you always want to see revenues rising. So Fossil, yes, is doing a pullback. Thank you for not chasing it. We kind of expected it would pull back. I'm okay with initiating a position. When would I get more aggressive? When we broke out above not last week's highs, the highs of May the 20th. May the 20th. The market was down big to come back by the end of the close. Not the Qs, though. Not the Qs. So you did have the leadership group was the laggard group on Friday. That's what I found most interesting. URA. Love URA. I haven't looked at the chart in a week. I may regret saying that. Um, I think that this is consolidating. I'm okay with a buy here, a nibble, scratch the itch. I would use a tight stop loss at around 31.20 per share. If it fails to hold, I would add more on the breakout and then the subsequent retest at around, this is going to change, around 33 bucks a share, thereabouts. Then you're going to find a lot of resistance on the weekly chart up here at this fractal resistance level, which is rising at about $35.50. So just be forewarned, you're going to have resistance not too far away from where we're at right now. And you can see in the past that every time we hit that level, we back off. Let's blow this up a little bit. I don't know how far back this goes. Yeah, back here, and here we are again flirting with it. So I would just be careful here. Daily chart. Really nice formation here. You can see that you have an uptrend channel. All right, this is not me who drew this. This is the automated trend lines. Take them off, put them back on. So we're at the lower band of support. So again, I'm okay with putting on the trade. I would just say you got to be aware of where your weekly resistance levels are. And then right up here, we're on a daily chart, weekly resistance levels in dashed line. So I'm going to share this out with you. Keep an eye on that, Jody, okay? And I would look for my exit point. If I bought here, I'd be looking to exit right at this upper band of resistance, wherever that may be, up at around 35 bucks a share, give or take a few dimes. Ulta, that's an interesting one. I purposely did not look at that one for a while because I believe earnings were coming up. It looked interesting as a contrarian trade. Let's get rid of some of this. Let's go to a weekly view. Overlay monthly. Good. That's already been done. So something interesting is happening here with Ulta. And I think it's bullish. I think the tables are beginning to turn here. They tried to break it out last week. It was rejected. You have a lot of overhead supply. All these sellers are in here. So it's not going to be a quick skyrocket back up higher. But what I would consider doing, I would not buy options here. I would, however, consider selling them. Yeah, you have a 40% IV rank, so the options are pretty expensive. I bet you the puts are really expensive. See what happens when we go out 40 days. If you sold a 20 delta, which is a 370 strike, you can expect to collect about 1 1/3% on premium per contract. Less if you hedge it, of course, with an iron condor or a put credit spread. But I would look towards probably selling premium here on Ulta. I would look for a breakout and then a retracement. I think this is going to be a healthy consolidation for the next 3 weeks, because you got to wait for your breakout week, pullback week, consolidation. Hopefully it breaks out. It's going to get knocked down. I think this is a great stock to sell premium on right now. Iron Condor comes to mind, or Strangle. Collect premium on both sides of the trade. So the way to do it would be, if you wanted to be somewhat conservative, is use a 20 delta. Where is my... Let's go with the 18. I wouldn't want to go with the 23. You could, but I want to be a little bit more conservative. So I'm going to sell the 430. Go 10 points wide. Collect a credit of 70 cents at the midpoint on 10 contracts. That'll give you $700 credit, less expenses. And it's probably a pretty safe bet. What's the probability of touching? The 430 call, probability of touching that number is only 30%. So you have almost a 70% probability that Ulta won't even get up to that strike that you sold. And on the put side, and I would argue that this is probably better, more favorable than what the market makers are pricing in here. Probability of touching, where are we at? 370 strike. It's got a possibility of trading out of the money of 75%. Touching, it's almost 50-50, but I think they're pricing in this downtrend. I think that is inaccurate, because when you take it's accurate by their metrics, but when you use technical analysis, in all probability, we're done going down here. It's not a guarantee, obviously, but I would be a seller at premium here. I happen to like this trade quite a bit. Stokes are beginning to hook up. RSI is hooking up. Let's go to the daily view. And this is what you got to expect. One day rip, next day they knock it down. This is what happens when you have a tremendous amount of overhead supply. So I like the sale of the puts here, or Iron Condor. I think that's the best way to do a neutral approach to this trade. All right, we're going over here. DEN. Denny's. I love Denny's. Unsustainable downtrend. I'm a buyer of these shares. On spec, get your rip and then get out. Get out. I would look at the short interest. If you have more than 5 days to cover the short interest, I would be a buyer of the shares. It's already begun to run. They beat it up. Unsustainable downtrend. I love descending wedge formations. Love them. But they're just for a quick scalp. Get in, get out. So I like Denny's here. You're probably going to get a retrace. I would buy that retrace. The descending wedge is already broken out on a daily time frame. What you should be looking at here is the weekly time frame. Very, very tight setup here. Why? High yield resources. Never saw this one before. Oh, it's penny stock. Ugh. Ugh. What are you doing? It's breaking out. Looks like it wants to go up. It's broken out on a quarterly time frame. We're using a monthly chart, quarterly time frame. We have broken out. Odds favor bulls. Wing. I would avoid this outside reversal bar on the last month. Any rally is probably going to get faded this month. Yeah, we broke weekly support. I think we're going to rally. We're going to do a check back. What they're going to do is they're going to bounce it off of VWAP. They're going to rally it back to say 383, 385. I'd be shorting it there. We'll keep this active for, I like this short side trade. You could sell calls here, call spread as well. Yeah. IV ranking 55%. I would just make sure there's no earnings coming up. That goes for all these names. I do not trade stocks into earnings. Don't do it. Last one up. Chewy. Long time, man. AFRM. Buy now, pay never. This is a broken stock. There's no two ways about it. It's going to bounce off a monthly VWAP. Maybe it holds, maybe it doesn't. I wouldn't short it. I wouldn't buy it until, of course, it shows us a reversal. There is no sign of strength here whatsoever. We are in a descending wedge formation. I would revisit this in a couple of weeks. Right now, I would avoid like the plague. CR, last one up, CRM. I haven't looked at it since after earnings eve. They had I don't have to tell you, I'm sure, but for those that are watching that are not familiar, they had a horrible earnings report. The first bad earnings report since 2006. Reversal bar on the day on Friday. This was unsustainable. I think that they rallied either up to 251 or all the way up to 261. If they rally it up to 261, I would be looking to sell call spreads, if not short the shares outright. I think that this stock is in a lot of trouble. Alta and Affirm were both my contributions. Thanks, Joey. All right, everyone. Have an awesome night. Don't forget about TrendSpider. 35% discount code below. Automated technical analysis using multi-time frame support and resistance levels. Like, subscribe. You know the deal. Have a profitable trading week and an awesome night. Be well.